In today's world, debt is everywhere. From mortgages and student loans to credit cards and business loans, debt fuels much of the economy. It's deeply woven into the fabric of the American dream, where access to borrowed money promises pathways to home ownership, education, and job opportunities. But while debt has opened doors for many, it has also created significant challenges, particularly when it comes to housing, employment, and long-term financial security. What if there was another way? What if we could move away from debt-driven growth and instead focus on an economy built on real assets, genuine profits, and sustainable practices? Imagine a system that promotes stability, job security, and equitable wealth distribution. One where the American dream could be within reach for more people. In a debt-driven system, one of the most visible effects is the housing market. While easy access to credit allows more people to enter the market, it also drives up prices, pushing home ownership further out of reach for many. Low-interest mortgages may seem like a golden opportunity, but they often inflate home prices, making it harder for average families to afford a home. As more buyers enter the market, real estate prices soar, and home ownership becomes increasingly tied to high levels of debt. But it doesn't stop there. Investors also use this cheap credit to purchase multiple properties, further driving up prices. This speculation leaves first-time home buyers and working-class families struggling to enter the market, and housing becomes an asset for the wealthy, rather than a necessity for the general public. As a result, renting has become the new normal for many Americans. With home ownership out of reach, demand for rental units rises, pushing rental prices higher. For many renters, this means paying a larger percentage of their income toward housing, which leaves little room for savings or other financial goals. The dream of owning a home becomes increasingly elusive, creating long-term dependence on the rental market. In a debt-driven economy, the divide between those who can own homes and those who cannot only widens, making it harder for individuals to move toward financial independence. But the effects of debt-driven growth extend beyond housing. The job market, too, feels the impact. Companies often use debt to fund their expansions, but this doesn't always translate into stable, long-term employment. Debt obligations push businesses to prioritize short-term gains, often at the expense of job security. To manage debt, companies may resort to cost-cutting measures like layoffs, automation, or outsourcing. As a result, job stability becomes a rare commodity, and workers face the reality of job insecurity. In addition, many companies, under pressure to meet debt obligations, focus on reducing labor costs rather than investing in their workforce. This emphasis on short-term profits leads to a job market with fewer full-time permanent positions and more temporary and contract work, jobs that often lack benefits like healthcare and retirement plans. For the working class, this creates a volatile, unpredictable job market that makes it harder to plan for the future. Meanwhile, wages have remained stagnant, while the cost of living continues to rise. As housing prices climb, so do the costs of healthcare, education, and other essentials. However, wages have not kept up with this inflation. For many people, this means that despite working hard, their paychecks can't stretch far enough to cover basic living expenses. In fact, many households are turning to credit cards or personal loans just to make ends meet. While these loans can provide temporary relief, they also create a cycle of debt, making it harder for people to build wealth and secure a better future. The reliance on debt to cover everyday expenses only worsens the financial instability faced by working families, leaving them trapped in a cycle of borrowing and repayment with little room for advancement. So, what does this mean for economic mobility and the American dream? The promise of the American dream has always been that hard work can lead to financial stability and success. But in a debt-driven economy, that promise is becoming harder to fulfill. The rising cost of housing and education, combined with stagnant wages and job insecurity, means that younger generations and working-class families are struggling to accumulate wealth. Without the ability to purchase homes or save for retirement, economic mobility becomes limited. For many, the dream of a better life remains just that, a dream, not a reality. As we look toward a more sustainable future, we can imagine an alternative to this debt-driven economy, an ownership-based system where growth is based on real value and assets, rather than borrowing. In this system, housing prices would reflect actual demand and available resources rather than speculative borrowing. By reducing reliance on debt, the housing market could stabilize, making homes more affordable for the working class. This could pave the way for more people to own homes, ensuring that the dream of home ownership becomes attainable once again. Moreover, companies would focus on long-term growth, prioritizing job security and fair wages for their employees. Without the pressure to meet debt obligations, businesses could invest in their workforce, creating stable, full-time jobs and offering competitive wages and benefits. This shift would reduce income inequality and ensure that workers are compensated fairly for the value they contribute. For the working class, this means greater financial security, more opportunities for advancement, and the chance to build a better future for themselves and their families. In an ownership-based economy, inflation would be more manageable, and purchasing power would be preserved. Since growth would be tied to real assets and profits, the money supply would be limited, helping to control inflation. For consumers, this would mean more stable prices and fewer cost of living increases. As a result, families would have greater financial security and the ability to save, invest, and plan for the future without the fear of inflation eroding their savings. Governments, too, would benefit from an ownership-based economy. Without access to unlimited borrowing, governments would need to prioritize essential services and make more responsible spending decisions. This could lead to a reduction in national debt, less reliance on borrowing, and more transparency in how taxpayer dollars are spent. Citizens would have a clearer understanding of where their tax money is going, and governments would be held more accountable for their spending choices. The environmental impact of an ownership-based economy could also be profound. By shifting away from debt-driven growth, companies would be incentivized to manage resources more responsibly, focusing on sustainable practices that ensure long-term viability. This would reduce the pressure to extract resources at unsustainable rates, protecting ecosystems and minimizing environmental harm. Additionally, the focus on real assets and profits could encourage greater investment in renewable energy and green technologies, accelerating the transition to a cleaner, more sustainable energy future. Finally, an ownership-based economy would promote more equitable wealth distribution. By tying growth to genuine value, rather than financial speculation, wealth would be more evenly distributed. This approach would empower local businesses, support small business growth, and reduce the concentration of wealth among the few. In turn, this would create a more inclusive society, where economic opportunities are accessible to all, not just a privileged few. In conclusion, the debt-driven economy has reshaped the American dream, making it harder for many to access home ownership, secure stable jobs, and build wealth. By shifting to an ownership-based model, we can create a more stable, sustainable, and equitable economy, one that prioritizes real value, long-term growth, and the well-being of all citizens. This vision for the future would allow people to regain control of their financial destinies, fostering a society where home ownership, job security, and financial stability are within reach for everyone. It's time to reimagine the American dream and create an economy that works for all.